Hey everyone, in this video, I'm going to review Meta Platforms' latest earnings results. I'm also going to update my recommendation on Meta Platforms stock. Coming into this quarter, I had Meta Platforms stock rated as a buy, and as I typically do with every stock that I follow, I update that recommendation every quarter. I incorporate new information into my recommendation. So let's do that right now with this video with Meta Platforms. Let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Starting with revenue, which increased by 23% for Meta Platforms, up to 34.146 billion. Remember, for several quarters, Meta Platforms revenue growth had slowed down for several factors. Three of them, most importantly. The first one was that Apple made changes to its privacy policy that made it harder for Meta Platforms to sell targeted advertising. Marketers prefer targeted advertising because it reduces waste. They can show ads only to people that are likely to be customers. And so because of that change, Meta Platforms wasn't able to charge as much per price for ads. That was one reason. The other reason was the rising popularity of TikTok. Consumers were spending more time on TikTok and away from Facebook and Instagram, and that was taking away revenue opportunities. Well, Meta countered with its own short form video format that is growing exponentially, and that's helping Meta Platforms recapture some of that time that was going to TikTok. The third factor was a slowing economy and businesses worrying about consumer spending. That kind of ebbed away in the most recent quarter. Businesses felt better about consumer spending, and so they increased their spending on advertising. That may not persist longer term because interest rates are moving higher, and eventually that will slow down consumer spending, although we haven't seen that just yet. Now, more impressively, Meta Platforms exploded its income from operations, going from 5.6 billion up to 13.7 billion, doubling its operating profit margin from 20% to 40%. Impressive to be sure. And net profit rising 164% from 4.4 billion to 11.583 billion. Diluted earnings per share jumping 168% to $4.39 per share. And this is typically what Meta Platforms has delivered over the last 6, 7, 8 years, with the brief difficulties stemming from the factors I mentioned earlier. The company operates a very lucrative business model. Imagine you're running a business where the thing that you're selling is created by your customers to begin with, right? The posts that people share on Facebook and Instagram, users create that, right? They upload their photos, they upload their posts, and that generates activity that keeps people on the platform, and Meta Platforms makes money on that. And they don't have to pay you and me to make those posts, to post photos on the platform. That's kind of like Walmart opening up a store and saying, why don't you all bring your favorite items, create some items, bring them to our store, put them here, and we'll sell them for you, and we'll keep all the money, but we'll give you a certificate that shows how many people liked your products. And we'll tell you, look, 100 people liked your product. Awesome. Keep making it, right? Keep making it because people like it. We'll keep all the money, but you'll get these things that says we like it, right? So that's kind of like what Meta Platforms makes its money on. People freely, out of their own voluntary free will, post items that gets people on the platform, that gets people to spend time on the platform, and Meta makes money off of that. And you can see, unsurprisingly, that's a lucrative business model. And of course, this all works because the company has grown to reach a massive scale. Family daily active people reached 3.14 billion people in September. That was an increase of 7% year over year. In other words, Meta added roughly 200 million daily active users to its family of apps in the current year. Impressive. Facebook alone reached 2.09 billion daily active users. That was an increase of 5% year over year. In other words, Facebook added 100 million daily active users. Ad impressions and the price per ad in the third quarter. Facebook or Meta platforms increased the supply of advertising 31% year over year. So they were showing 31% more ads in this quarter than they were 1 year ago. And that only decreased the price per ad by 6%. That only decreased the price per ad by 6%. So they increased supply by 31% and they only decreased the price by 6%. Now with this, they risk doing too much, because if they show too many ads, then people will get annoyed with the platform and not log on to Meta platforms as often if they're seeing too many ads. So they have to play a balance here with not showing too much advertising. This is where it helps when people are spending more time on the platform, because then the ads per minute of time spent on Meta will be better if they're spending more time. And then it also helps to have more people coming on the platform, because you can spread out the advertising shown to more people. And it doesn't hurt that they added 100 million daily active users for Facebook and 200 million daily active people across the family of apps. Also, Meta has been on a cost-cutting campaign. Total costs were 20.4 billion. That was a decrease of 7% year over year. So they were able to deliver this result with 20% increase in revenue with fewer people and fewer expenses, making this quarter that much more impressive. More specifically, headcount came in at 66,185 as of September 30th. That was a decrease of 24% year over year. 24% decrease in headcount. Definitely trimming the fat there at Meta Platforms, delivering this kind of operating leverage from that 23% increase in revenue. So Meta has substantially completed all their planned layoffs, but they're still working on reducing their office space, because they're allowing some type of work from home arrangement. And since they've got 20,000 fewer employees now, they're not going to need as much office space. So there's still room to lower expenses by decreasing the footprint. And I like to see that. I don't want to see tech companies adding more office space, especially when they have this option to allow people to work from home. Moving on to guidance for the fourth quarter. Meta expects revenue to come in at the range of 36.5 to 40 billion, which would be an incremental improvement from the previous quarter. The company anticipates full year 2023 total expenses will come in at 88 billion at the midpoint. That was lower than the 89.5 billion at the midpoint they were previously forecasting. Throughout the year, Meta has lowered its total expense forecast in each quarter. So they're spending less than they thought they were going to spend. And I think they're making adjustments as they go forward. And this is why I'm not too concerned about the full year 2024 outlook, which some market participants were concerned about, because for 2024, Meta is forecasting total expenses to be in the range of 94 to 99 billion. In other words, an increase. If they come in at 88 billion, the midpoint of this, let's say at 97 billion, that would be a $9 billion increase in total expenses year over year, which kind of caught some investors off guard, asking, wait a minute, we thought you were on this cost cutting campaign. Why are you increasing expenses by over $9 billion? But I think just like what Meta did this year, if their revenue doesn't come in as well as they expected to, they can trim down these total expenses forecast for 2024. Because while the depreciation expense for 2024 is not going to be under their control, because that comes off of a capital base that they put in place in 2023, they anticipate growth in payroll expenses as they work down their current hiring underrun and add incremental talent to support priority areas in 2024. This second area, payroll growth, is something that they can slow down if they need to, if revenue doesn't come in as good as they are thinking it will. And then for their Reality Labs segment, they expect operating losses to increase meaningfully year over year due to their ongoing product development efforts and ongoing augmented reality and virtual reality segments. This too, they can slow down if they need to. If revenue's not coming in as well, they can push out some of those investments further down the line. They anticipate full year 2024 capex will be in the range of 30 to 35 billion, with growth driven by investments in servers, both AI and non-AI hardware, data centers as they ramp up construction on sites with new data center architecture as we announced late last year. Excellent. I like that they're investing in these growth areas and they're not investing in building new offices. I don't mind Meta Platforms investing, putting money in their research and development because they have such a lucrative business. I want them to continue investing in that business to protect the core business and add incremental areas of growth in their business. It's a really lucrative business, as you saw. They generate strong profitability. I want them to protect that business, to grow that business because it's so profitable. So despite the relatively solid quarter from Meta Platforms, the stock did not react upwards the way that I thought it might following these results. Of course, that can partly be explained by Mark Zuckerberg's cautious tone in the conference call, suggesting marketers are pulling back their spending because of a slowing economy, concerns about the wars breaking out in the Middle East. Still, I think investors overreacted to that pessimistic commentary from Mark Zuckerberg. The stock is trading at a forward price to earnings of 17.46. So, to update my recommendation, I still think Meta Platform stock is a buy. Like I talked about earlier, it's got a lucrative business model, billions of monthly active users that continue to log on to the app, and billions of daily active users that log on to the app every day. So I like this business. I like the business model. Users create the content for free for Meta to make money off of. I mean, it's remarkable. I really like that business model. So I still think Meta Platform stock is a buy at this price. But before I let you go, if you've gained any value from this video, please subscribe to the channel. It'll really help support and keep making videos just like this one. Thank you so much for watching.